If I said to you, hey, everybody in the world watched our podcast and they realized that we were right, and then they all bought Bitcoin, well, Bitcoin would be $5 million tomorrow morning. The winning strategy is you hold the most desirable asset for the longest period of time, and you let everybody else panic sell. Just look at the total world wealth. And if the total world's wealth is 900 trillion, $1,000 trillion, then there's just no reason why Bitcoin should become 10 to 20% of that.
Michael Saylor, the CEO of MicroStrategy, a company heavily invested in Bitcoin, views Bitcoin as a desirable asset class with substantial long-term potential. MicroStrategy has committed over $2 billion to Bitcoin investments, despite widespread market expectations of a highly bullish trend for both cryptocurrency and Bitcoin following the ETF approval. This anticipated scenario has yet to materialize. This has raised questions about potential doubts among investors. Raoul Pal, a prominent crypto expert and CEO of Real Vision, shares the perspective that it's common for Bitcoin to experience a dip within the first 2 months of 2024, followed by an eventual upward breakout. It's crucial to recognize that Bitcoin typically undergoes a bearish phase before transitioning to a bullish trajectory, and this process takes time. Crypto, being a retail asset, relies increasingly on liquidity for its sustenance. The more funds circulating among individuals, the more favorable the conditions for crypto and Bitcoin. Conversely, a scarcity of liquidity presents challenges for the crypto market. Michael Saylor provides valuable insights as he breaks down the intricacies of the current situation and sheds light on the anticipated future points for Bitcoin. Understanding the nuances of these market dynamics is essential for investors navigating the crypto landscape. Stay tuned as Michael Saylor guides us through these complexities, offering a comprehensive analysis of the current state of Bitcoin and its potential trajectory ahead. If you enjoy financial content, give us a like and subscribe for ongoing updates and in-depth discussions on the evolving trends and developments in the cryptocurrency market.
It devalues currency, it devalues physical property, and it devalues companies because it's happening in the physical world, like that tidal wave. But that chaos is going to increase the value of Bitcoin for two reasons. There's a big idea. The first reason is, as people lose confidence in the countries and the companies and the currencies, and their other assets, they'll run to Bitcoin. That's one reason chaos is an engine for Bitcoin. But the second reason is, if you got drunk and you burned down your building, you would destroy capital. If you got angry and you destroyed your company, or you did a stupid thing, like maybe you produced the wrong product and nobody wanted to buy it and you bankrupted your company, you've destroyed capital. If you start a war, anybody that has capital to invest, they should take a minimum of 10-year time horizon. And I really think a 100-year time horizon is the right time horizon to get you to think rationally. So now the question is just, how do you want to have your portfolio allocated? Some mixture of scarce, desirable assets. I've already laid out the case for why Bitcoin, I think, is the most scarce, most desirable asset. And if you're not going to hold Bitcoin as the scarce, desirable asset, then I think you have to own something else. Like I respect the royal family of Japan or Britain for holding real estate in the middle of their respective cities, right? Tokyo and London. Have a scarce, desirable asset you're going to hold forever. I don't think trading is a good idea for anybody other than a professional. So if you look, maybe 0.1% of the people, if you're a professional with proprietary models and proprietary equipment and proprietary access, you might be able to trade. But 99% of people cannot trade successfully. I don't think I can trade successfully. And if you look at the statistics, if you remove 1% of the trading days, the 1% most profitable trading days from your activity, there is no return. Like you would get a 7 or 8% return per year on stock portfolios if you just hold them for 100 years. But if you take out 2 days a year or 3 days a year, you actually get a negative return if you take out the 3 best days. So if you don't guess the 3 best days, if you're not long the 3 best days out of 365, there is no return. So statistically, 99% of the time, someone's telling you to trade, but you shouldn't. And 1% of the time, everything moves, but generally people can't predict when that 1% is. It'll happen when you least expect it. So trading is, in my opinion, a fool's errand. I think it's a very dangerous thing. And most people are going to squander their capital because they're going to try to outsmart the market. And I think stock picking is equally challenging. I just laid out, there's 7,000 publicly traded companies. If you take out the 7 best ones, there is no return. 99.9% of the companies can't beat inflation. Okay, so we know which ones can, like Apple, Google. But the question is, did you know that 10 years ago, the reason I was able to buy 17,000 Bitcoin is because I was able to pick Google and Apple and Amazon in 2010 and hold it for a decade with a lot of money, right? But on the other hand, if you picked Amazon in the summer of 2020, you didn't make any money. In the summer of 2020, I tell you a real story. It's like when my 3 or 4 year old niece, when she said to me, I like the Big Apple. This was like 2010 or 2008. I said, wow, it's a young girl and she's saying she likes Apple. This means Apple's a big deal. We should load up on the stock. And that was when 98% of the world, or 99% of the world, didn't agree, and they thought it was a stupid idea, and Apple was valued at like 8 times cash flow, and you could have bought it 100x from there or something, just ridiculous. But I thought, yeah, this is a good idea. And I wrote this book, The Mobile Wave, and I actually tell the story in the first chapter of The Mobile Wave about how, my young niece thought Apple was amazing. She called the Big Apple, that was the iPad. And I thought the Big Apple had been New York City, and now the Big Apple is iPad, and this is a big change in wealth. Okay, so that was a good entry point because nobody agreed, but it was unstoppable. That's what I say. The best investment is something everybody needs. Nobody can stop, but nobody understands. Right? That's what Apple was. That was what Facebook was. That was what Amazon was in 2008. Now, in the summer of 2020, you know what my niece told me? She said, I'm buying Amazon stock. Everybody knows it's a winner. Because everybody's in lockdown and they're all basically ordering, they're ordering their food in, they're ordering their groceries in. Okay, so everybody knows, every 20-something investor, every Gen Z person knows that they should buy those stocks. Well, it didn't work, right? Because everybody knew it, everybody agreed, everybody needed it, but everybody understood they needed it. And so, in fact, what you've got 36 months later is you have all the logistics challenges, the supply chain challenges, the labor challenges, the inflation challenges, the manufacturing challenges. Everybody needs it, and everybody understands it. But, if the criteria was, do you need it and do you understand it? The richest people in the world would be investors in water companies and electricity companies, because everybody in New York City needs water and power. But name me one billionaire in the 21st century that's a water billionaire or electricity billionaire, And the reason why is because everybody understands it. And once everybody understands it, it's getting regulated. I think that when they talk about, the recession's coming or whatever, they're attempting to out-stock pick the market. They're attempting to out-trade the market. They're feeding on your gloom and doom. What do they want you to do? Sell your scarce desirable assets and buy the dollar? They want you to go short. Are you going to sell London real estate to buy the dollar? No. Or they want you to sell your desirable assets and give the money to them. It's like, I wouldn't trust anybody that basically comes to me with doom and gloom and fear and says, whatever your idea is going to zero, so give me your money. You see, the difference is I'm not asking for your money. I'm telling you, keep it yourself. Just, don't blow it. So if all these things happen, then the governments of the world are going to print more money to solve the problem. If there's war, if there's recession, they're going to print more money and it'll drive up the value of scarce desirable assets. If none of these things happen, they're still going to print more money, right? In good years, they're going to inflate the currency supplies. In bad years, they're going to inflate the currency supply more. And, if you look back for the past 100 years, if you could have bought an acre of real estate in New York or London or Tokyo, at what point would you have sold it? Never. The only winning strategy is you hold the most desirable asset for the longest period of time, and you let everybody else panic sell. And I think that's the case with Bitcoin right now. I mean, you hold on to it and let everybody else, trade 7,000 different razor blades.
Bitcoin is going to be understood by the whole world, and we are seeing a tremendous growth, and maybe much earlier than expected, going to reach the saturation point where Bitcoin is afterwards going to grow with the inflation rate, whatever it might be.
I think it takes 20 to 30 years for a new technology to diffuse to 80% of the world, or 80% of the educated world. So I think you got to look out over the course of a generation. William Gibson has a famous phrase. He said, the future's already here, but it's not evenly distributed. And so what you have is you're always going to have some people that are going to be very hypersensitive to new technology and others that are going to go slower. There are plenty of people with a lot of money in the US and Europe that don't have smartphones. The smartphone revolution really kicked off in 2010, and that was 13 or 14 years ago. 2009 was the iPhone 3. So 14 years ago was the smartphone revolution. And if you ask anybody in their teens or 20s or 30s, of course, they grew up with these things. But you'll find a lot of people in their 60s, 70s, 80s that don't have smartphones. And especially, do Warren Buffett and Charlie Munger, do they have smartphones? About 4 or 5 years ago, they bought Apple stock, but they still haven't bought Microsoft stock. So, but what do they have? They have $1 trillion balance sheet. So there's a lot of money in the world that's in the hands of people that don't use the internet, that don't use smartphones, that aren't definitely tech savvy. And so there's going to be a long tail, call it a 20, 30, 40-year tail, where that money is going to gradually get invested and reallocated into the Bitcoin ecosystem. But it's not like in 24 months, everybody with money in the world wakes up and realizes this. And I've said, so what's the right forecast? It's highly likely that what you have is a serpentine growth, right? Where you're going to grow with a slope of 40 or 50%, and it's going to be cooling down from 45 to 40 to 35% to 30% to 25 to 22 to 20% annualized over the course of the next 20 years. You won't get a perfect exponential. What you'll get is a surge up followed by a crash down, and you'll have this serpentine pattern growing. So there is a cycle. What will drive the cycle? Lots of dynamics. A regulation will drive the cycle. Halvings will drive the cycle. Awareness will drive the cycle. Apple will drive the cycle. Big tech will drive the cycle. Technology will drive the cycle. War will drive the cycle. Panic, hyperinflation will drive the cycle. And it'll look different depending on what country you live in. For example, Bitcoin is already at all-time highs in places like Argentina, or Lebanon, right? Or if your currency collapses, you're already at the super cycle all-time high. But in other places, it isn't. So you got to consider frame of reference. So I don't think this is a problematic thing. What it means is If you're trading Bitcoin with a time horizon of less than 48 months, then there'll be some point where you might be underwater in your latest purchase. And the important point is not to panic and to look out 10 years. And at the same time, the world's not going to be rational overnight, but you don't want it to be rational overnight, because statistically, you're much better off if Bitcoin gradually adjusts up between now and 20 to 30 years from now. If it gradually matures, like if I said to you, hey, everybody in the world watched our podcast and they realized that we were right, and then they all bought Bitcoin, well, Bitcoin would be $5 million tomorrow morning. If Charlie Munger and Warren Buffett watched this podcast, and if they figured it out, they have $160 billion of cash right now. If they understood that they could buy $160 billion worth of Bitcoin, it would go up by a factor of 10, and they would make $1.6 trillion in the next 12 weeks. That would be good for them, but it would be bad for McDonald's guy. It'd be bad for every worker, because they would lose the opportunity to front run Berkshire Hathaway. You see, so it's going to go up. It's going to go up cyclically. It'll grow fast. If I said I expect 40%, it'll grow 80%, and then it will crash down 30%, right? There's no way that the world is able to adjust in a perfect exponential. That's not the way that markets move. They overshoot and they undershoot. The right way to think of it is long-term, the money supply will expand at 7%. The stock market, a portfolio of scarce desirable stocks like the SP index, will probably track the money supply. Long-term, over 100 years, Bitcoin should be plus 7% more, because you get rid of the risk premium, the risk and the liabilities of the companies. But in the near term, we're in high growth Bitcoin right now, and we're growing, 20 to 40% with volatility on an annualized basis, until we move from high growth state to more mature, virtuous state. And then you got to just look at the total world wealth. And if the total world's wealth is 900 trillion, $1,000 trillion, then there's just no reason why Bitcoin should become 10 to 20% of that.